S&P 500 pops positive again after a strong November jobs report. Let's dive into it. Hey guys, welcome back to the channel. Frank Talks Money. Real quick, I just need one favor, guys. Just remember to like the video. The more likes the video receives, the more the algorithm will share the video with more like-minded people like you and me. Now let's get right into the content. U.S. stocks mostly rose on Friday as investors digested the last monthly jobs report of the year, a crucial test for the prospects for interest rate cuts in December and beyond. The U.S. economy added 227,000 jobs in November, slightly more than expected, as the labor market rebounded from October data that was deemed by severe weather and labor strikes. The unemployment rate unexpectedly ticked up to 4.2%, but the economy remains resilient. On Friday, the Dow Jones Industrial Average lost about 0.30%, while the S&P 500 rose roughly 0.30%, while the tech-heavy NASDAQ Composite increased almost 1%, led by gains from Amazon, Apple, and Meta, aka Facebook, all gaining positive results for the week. The daily results of the major indexes also reflected on their weekly gains. The Dow Jones shed 0.5% for the week, while the S&P 500 gained close to 1% for the week, and the tech-heavy NASDAQ climbed more than 3% for the week. The stock market is still smoking, guys. Guys, if you're still here, hit that like button for me, please. If you're still here, hit that like button for your boy, please. The jobs report also largely matched hopes for a gridlock reading, strong enough to dampen concerns about the economy, but soft enough to keep the Fed's options open on lowering rates this month and into the next year. Meanwhile, the rally in Bitcoin continued after slipping earlier this week, trading around $101,000 Friday afternoon. Wow. Options show some investors are hedging against a deeper pullback after the leading token's record-breaking surge to over $100,000 for the first time this year, earlier this week. The rally has also been spurred by hopes of support for digital currencies from President-elect Donald Trump, who on Thursday named former PayPal COO David Sacks as his White House AI and crypto czar. Looking ahead to next week, if Friday's labor market reading likely kept the Federal Reserve on track to cut interest rates later this month, next week's inflation reading is perhaps the final key data point that could alter that storyline. On Wednesday, a closely watched report on U.S. inflation will give the Federal Reserve more closer glimpse into consumer prices before they are set to meet for their policy meeting in the middle of the month. If the Consumer Price Index, CPI, surprises to the upside, that might pressure central bankers to halt interest rate cutting. But on the flip side, if it's going down, then they may continue to see the Fed cut interest rates even more. So guys, right now it seems like the economy is going strong. People are working. The labor market is not hurting right now. People are working. People are just having a hard time surviving because prices have increased astronomically over the course of the last couple of years. But like I want to tell everybody, like I've preached before, the prices that we are currently paying, guys, they are not coming down. So what we have to do is get ourselves in a position to where we can more afford these prices and be able to live and thrive in our personal lives. Right now, guys, I'm just going to be honest with you. Right now, the only individuals that are thriving right now are individuals that have little to no debt, individuals that are investing, and individuals that are living at or below their means. Those are the only individuals that are really surviving right now. Those are the only ones. The ones that are living at their means, have little to no debt, and that are active investors. Guys, if you're not investing and growing your money right now, guys, I'm sorry to be blunt, but you're going to continue to suffer. You're going to continue to suffer. You cannot just depend on a paycheck today in 2024. It's just not going to happen. I don't care how much money you make. I don't care if you're making 75 grand a year, 100 grand a year, 150 grand a year. If all you are doing is surviving off a paycheck with no other source of liquid funds that you can tap into, then guys, you're going to continue to suffer. I'm just being honest and being blunt, because the only people I know right now that are suffering or just having a hard time making it or living paycheck to paycheck is the ones that have no savings, no investments, and are just strong and have and debt, and they got so much debt they can't breathe. You can't deal with high inflation and then have debt, living above your means, no savings, not investing. You won't survive, guys. You just won't survive. You just won't survive. And I'm just being honest. I mean, I'm just stating the facts here. That's all I'm doing is stating the facts. You know, the only individuals that are having a hard time right now is the ones that have no access to any other cash other than their job. Other than the job. Those are the ones that are suffering right now and are having a hard time making ends meet. So guys, that's my update on the stock market for the week. I want to keep giving you guys this information, let you guys know what's going on in the market, because this is what I do. This is what I love to do. I love sitting down, looking at these numbers, analyzing these companies, talking about these companies, seeing these companies grow and be innovative, because I know it's money-making opportunities for us active investors. Money-making opportunities. So guys, with that, I want to thank you guys for tuning in real quick. Didn't keep you long. Just remember to like the video, share the video, and most important, please consider subscribing to my YouTube channel, Frank Talks Money. And with that, guys, remember, financial decisions you make today will impact your financial life tomorrow. Thanks for tuning in. Frank Talks Money. I am out.